Let's drill down to some of the stocks on the move today. And for that, we go to Isabel Lee, Bloomberg Cross Asset Reporter. What are you looking at?
Carnival. It's edging lower by now actually more than 9%. Carnival upgraded. So Morgan Stanley upgraded Carnival rather to equal weight from underweight. So the analyst said that a lot of bad news seems to be priced into the cruise stocks given share price decline. So basically, its risk reward looks fairer now. But why is the stock plunging on this? They did reduce their price target to $21 from the previous $25. And cruise stocks in general have really seen a huge drop this year from year-to-date highs, averaging around 41%. But I feel like, and analysts say this, you would want to steer clear of the cruise sector when there's a recession or an imminent recession, because who would be taking cruises?
Well, I think cruise people are pretty passionate people. I mean, it's almost like a utility to them. I don't know, but you're right. That's a discretionary spend.
I've never been to a cruise.
You've never,
No,
me neither.
No one here has, so we can't really say.
No, Charlie
but it's not just that.
I
It's
have
also
a kayak.
things like
Does that count?
Kayak.
no. But thanks for asking. Also, you got apparel and furnishings also falling in the CPI. So if you put them all together, maybe you're seeing a little bit of broader weakness there. What else are you looking at?
CarMax, this is a big drop because it's down by almost 17%. So they backed away from the timing of their financial goals. They really just joined a long list of companies doing that. Delta is the recent example. They pulled their 2025 profit guidance. So CarMax is a used car retailer. They did make progress towards their target. They said they will, but they didn't give any timeline. Trump's tariffs are expected to hit the auto sector in particular with a 25% levy of imports. We have car buyers rushing to dealer lots last month. So really, we're going to see if it drops even more today, but it's really suffering steep downturns.
I bought my car a few weeks ago. I wasn't thinking about the tariffs, but maybe
Good
that was
timing.
maybe that was good timing.
He sounds like he bought the car for himself. Let's just be clear. This was an offspring purchase.
Yes, for an offspring. And we leased it for the offspring.
But this was a very good lease at the end of the day. And also just goes to show in a tough tape, right? The story about Delta not having guidance, very different than like a CarMax, etc. What else?
Lastly, Constellation. So all stocks in the red. This is also in the red, down 4%. So they're a beer, wine, and spirits maker. They issued downbeat guidance, weighed by new tariffs and really muted demand. So the company expects earnings to be lower than estimates for 2026 fiscal year. But this already factors in the tariffs, because we've also heard a lot of companies not factoring in tariffs. We have Truist Securities saying they were surprised the company offered guidance at all. Even before this, Constellation has been struggling with lackluster sales, because we all know that alcohol demand has really been sinking. And even with this tariff, that's going to be... It has.
Not in my house.
Let's be honest here.
What are you talking about?
But there have been so many different Surgeon General warnings now about like how many drinks you can drink a week and still be healthy. There was kind of a reset after COVID when everyone was drinking like they had wooden legs. Only talking about me, but that's okay. Anyway, but it was interesting to see Constellation Brands with that and really pivoting to the higher end wine and spirits from that. All right, thanks so much, Isabel Lee, a Bloomberg Cross Asset Reporter. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts.